NEO stock is up 13% in the last 5 days, in my opinion, largely due to these two green flags I'm going to talk about in this video. So let's get right into these details on why I think NEO stock has two green flags in 2023 and beyond. So, in its most recent earnings call, NEO said that with the delivery of their NT2 product and the higher price from the second quarter to the third quarter, the average selling price and gross profit margin per car will recover. Will recover. So we are confident that the gross profit margin will start to recover to double digits in the third quarter and over 15% in the fourth quarter. Those are huge increases if you look at where they were in the first quarter. And in fact, let me show you that. So in the first quarter, gross profit margin for NEO was just 1.5%. That was a huge decrease from 14.6% in the first quarter of 2022. So it fell from nearly 15% down to 1.5%, but thankfully NEO management said that that's going to recover in the next few quarters and recover above 15% in the fourth quarter of 2022. So that's certainly a green flag for NEO stock investors. Now, why did the gross profit margin fall so much? Well, NEO management said it was due to a number of factors, including the one that customers were buying lower priced models of their cars, and battery prices increased for NEO in its first quarter. Those factors are likely to subside, management says, in the second, third, and fourth quarter of this year. So that's certainly a green flag for NEO and NEO stock investors, and certainly justifies a rising stock price, because the gross profit margin going from just 1.5% in the first quarter to over 15% in the fourth quarter is a nearly 10x increase. And so when investors saw this, following what they saw from the press release, that increased their enthusiasm for NEO stock. So the second green flag I'm going to discuss for NEO is the decreasing need for cash investment. So NEO management said that we believe the current production capacity is sufficient to support the needs of NEO brand and Alps brand. It means that in terms of production facilities and capacity, there is no need for a big CapEx investment. And that's another hugely positive indicator for NEO stock. That means all of the money that the company has put into research and development, property, plant, and equipment, all of that investment over the last several years has built out the infrastructure sufficiently to allow the company to now grow into those investments. And that means that less need for cash investments, which is really good news. And that is a positive for NEO's cash balance, which stood at nearly $5.5 billion as of March 31st, 2023, which, if you've been following electric vehicle companies, $5 billion can go away very quickly because it is very expensive to launch new models and expand production capacity. So the fact that management is saying that they're sufficient means less need for capital investment, which is good news for NEO stock investors. In the market front, we believe starting from this year, we should have sufficient power swap stations to support both brands to share the power swap stations. So another good news, whatever they've invested in their power swapping technology, remember NEO is unique in that they're doing the battery swapping technology instead of focusing more on battery charging technology. And so this is faster, but that's required a significant investment from NEO. But management is saying that that investment that they've put in is sufficient to share the power swap stations between the two brands, so to expand and grow into it. That means that the costs are, they're flat, and as sales grow, costs are going to stay relatively stable, not grow as quickly, and that's going to lead to rising profit margins, which the second green flag supports the statement from the first green flag, which management said that their gross profit margins are going to increase substantially for the rest of the year. which makes sense if you look at this statement saying that their production capacity is sufficient. So NIO is just going to increase production at their existing facilities, which is going to spread out those costs across more vehicles, which lowers the cost per vehicle and expands the gross profit margin. So certainly two green flags for NIO stock investors to consider and be excited about. And already you can see it in the stock price performance in the last 5 days. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.